Welcome to another stock market update. Today is March 14, 2020. Last week, the market continued its wild ride. It just went up and down, the couple thousand point up, couple thousand point down. I mean, who could follow this, right? And just like I said last week, it's just basically like a roller coaster. And you see on Friday, it went up almost 10% on the Dow Jones Industrial and went up, over 1,900 points. So let's take a look at the index chart here. Over here, notice that what I have is I have drawn in some lines here on the New York composite, the index for the New York Stock Exchange composite. You can see that it went down below the 2018 December low on Thursday, but on Friday, with the last hour push, it got above back and closed above that closing low back in December 2018. And you see the Dow Jones Transportation actually went below that a couple days before that, and it wasn't able to close back above it on Friday. So it is still remained below the 2018 December low. And then the Dow Jones Industrial, it went below that on Thursday, but on Friday, it got that 1,900 some odd point, almost 2,000 point up on Friday, and pushed that index back above the December 2018 low. But look at the S&P 500. The S&P 500 is still above the December 2018 low. It has not tagged that level yet. Likewise, the NASDAQ 100 is also still way above that low. Similarly for the NASDAQ composite. But for the Russell 2000, it too dipped below that 2018 December low and closed below that. So the market certainly is kind of a mixed bag. We have 4 out of the 7 index made a new low below the December 2018 low, while the 3, the S&P 500, the NASDAQ 100, and the NASDAQ composite, which are the same 3 indexes that have been moving up and make new all-time high, while all the other 4 indexes did not. So certainly they are still running a divergence for other indexes, even on a sell-off. Looking back here, what I have here is essentially looking back over here to see that, when these indexes hit new low, and while the Dow Jones Industrial back here in 2018, when it tried to take out that, test that March, April low here, it did not come to that low. And same thing with the S&P 500 and the NASDAQ 100, NASDAQ composite. And barely, I think the Russell 2000 went down. But what this tell me is, if you look at these, the indexes that did not hit new low eventually will come and join the party, right? Like this one here, and this one, because they all came down in December to make that new low. So everybody joined in eventually. And that's basically what I'm expecting it to do here, because over here, we did not see everybody join in here, right? Because these guys did, make a new December, hit a December low, took out the December low, but these 3 did not. So I expect that eventually we're going to get another push down, right, to a newer low, right? Push down to a newer low, and at that point, eventually all of these guys will hit new low. Looking at the put-call ratio here, you can see that the put-call ratio actually came down on Friday here, but it's still above 1 because it is still sitting relatively high. We need to see this come back down and dip below 1. So we'll see how the rally at the close on Friday, will there be a follow-through on Monday and Tuesday next week. Next week is FOMC meeting, so there could be some volatility there. See what the Fed is going to do next week, and see maybe would it be able to continue the market rally that started on Friday's close. And here the volatility is also coming back in a little bit, but it's still pretty high. Went up above the 70 level, and it came up to up at the 75 right now. So Friday it closed back down to 57.83. So we'll see what this thing come back down. It is still very elevated, and as we see here on the S&P 500, got a nice rally near the close to push it back up. So we'll see. Looking at the new high, new low, you can see that the NASDAQ is sitting at minus 828, and you see that it took out this low here by a heck of a margin here. The low is like minus 2,093, and that was on Thursday. And similarly on New York Stock Exchange, new high, new low, it was down at minus 2,380. Now, just give you a little perspective on how bad this is. There is just a little bit over 3,000 different stocks being traded in the New York Stock Exchange. So when you have 2,300, close to 2,400 of them is making new 52-week low, you know that market has sold off. A lot of stock have been beaten down, right? Okay, so even at Friday came back up and only 641 make new 52-week low. That doesn't mean the other 2,400 came up and getting ready to make new high. It's just that it did not fall off the cliff again to make new low. So wouldn't be surprised to see that in the coming days, the coming week again, if we continue to see the sell-off after a little bit of a dead cat bounce, if that is indeed a dead cat bounce. So we'll see, because there are other things in the market that telling us that this has not, the low has not been made yet, right? So that we could see it come back down. Now, if next time when the market hit new low, close at a new low, and the new high, new low is actually above this low here, this Thursday low, then that is a positive. Okay, so that's just because it come down doesn't mean it's always bad news. Sometimes bad news is good news. So just keep an eye on that. Here we are looking at the cumulative advanced decline on the New York Stock Exchange versus the S&P 500. You could see that the advanced decline did not really make that much of a headway on the bounce on Friday, but nevertheless it did come up. So it does show there was a positive advanced decline on Friday while the market closed up. Here we see the NASDAQ 100 came down on Thursday. See the AD line, the cumulative AD is really took a dive. Though got a little bit of a bounce off from the Thursday low, but wasn't too much. But at least it's positive on Friday's close as the market rallied back up a little bit. So again, we're going to be watching these market internal for sign of some sort of bottoming, with this with this pullback. I mean, a lot of people is calling this a bear market now because it have fell more than 20%. Okay, lost more than 20% from its previous high. Here we're looking at the S&P 500, the cash index. You can see that, remember last week we're basically looking at this retracement zone here, and we're saying that we're looking for the price to come down to this retracement area and see where we get a bounce, or could it get back above the 618. And you see here right now it went to the 38.2. So basically went to the retracement zone, and usually when we see that, then there's a good possibility you're going to retrace back down to 100%, which will be somewhere down at the 2346.50 area. But we could get a bounce if I put in this Fibonacci retracement here, and if use this as the the start of this Fibonacci retracement. So if it come back up to this retracement zone here, which is 2886 10 and 28.0868, 27.31.26. So we could get a little bounce, come back up here, maybe attack this 50% area, 28.08, and then come back down. But there also could be a possibility of come back up near the 23.86. So we're going to want to see, will the cash index come back above the 27.31, right? And see if we'll get a rejection back down, up at this retracement zone. The high for this retracement zone is 28.86, which is close to this 50% retracement here on this swing up, okay, at 28.70. So that's what we're going to be keeping an eye on next week to see if there is a continuation of this this bounce. Want to see would it be able to get back into this retracement zone and see would it be stalled out prior or right at this near the 28.8610, because I do expect it to reverse back down at some point and take out this 23.4658. But of course, anything is possible, right? This is just one possible scenario that I'm watching. Okay, we could give us a V bottom and just go back up and make new high. That's always a possibility, right? Nothing is impossible. But what I'm putting on is something that is more probable, right? We're basically playing with probability, okay? Now, looking at the U.S. dollar, you see that the U.S. dollar actually came below the, went below the 95. Remember, that was one of the level that we're looking at for the dollar to come down since it broke this trend line here the prior week. You see that it came down and got a nice rally back up to 98.765. So I expect this dollar to maybe chop around a little bit and eventually go back up. And once again, right now I'm looking at the 100 level. And here, looking at the crude oil last week, we're saying that these two levels coming down, and we're basically looking to see will there be some sort of a agreement between Russia and the Saudi Arabia to possibly push this back up to the 50, and apparently not. And also a lot of the airline is cutting flight. So a lot of people basically work at home. The demand side is once again being pushed further down, and I think that basically caused the oil to continue to sell off. And it seems like it is trying to come down to this 25 area. So we'll see, because there are some level down here basically for potential support, and it might have maybe tag this level here, this area, and might get a little bit of a choppiness here and maybe get a little basing period and then push it back up, because Trump had also indicated that the United States will buy up some of the oil while it's cheap to build up these strategic reserves. So that might put a little bit of a support on the oil prices, because that if the oil price go too low, that will not only hurt the OPEC, but also hurt the shale oil producer in the United States. And those are some of Trump's supporters that he really want to help. And I think that's one way that he is trying to send a message to those people or that industry that he's there for them by initiating the purchase of oil at these low level to refill the strategic oil reserve. And here gold, once again, I think gold is basically because of the sell-off in the equity market. A lot of people probably have to raise cash. A lot of could be that the fund redemption, margin call, usually on a crisis like what we're having right now. You normally see gold be a safe haven that people will basically buy up the precious metal, and also with the the central bank injecting a lot of liquidity into the financial market to try to prop up or prevent the global economy to go into the tank. So there's a lot of cheap money there, and that usually also help the gold prices. So what this sell-off probably mean is that a lot of people basically have to sell gold to raise some fund to either for redemption, their client want to redeem, or or for margin, covering the margin. So we'll see where gold gonna lead us, because I wouldn't be surprised to see it come back down to this 618, near the 1450, where this continue to come down, because we basically looking at this trend line here, right? It could come down to this test this trend line, and that would be bringing this thing back into the retracement zone here, and we might have to readjust that. If we readjust this Fibonacci retracement here, okay, let me put a new one up, and let's do this. So if we take it down to this area here, right, this big swing, then you can see that there is this retracement zone right here for gold. All right, so basically 1500, 1435, 1436, or 1372. So basically looking at 1500 to 1372 area. That's one possibility that we could see price come back in and try to chop around there. Let's take a look at Tesla here. Last week we were looking at this inside week, and we're saying that see if it's going to come back into this retracement zone. If it dip below this 50% level here at the 572.99, then we'll essentially want to see it would be able to get back up above the 618, above the 666.45 before I start looking for a long setup and then play it back up. As you can see right now, essentially it is coming down, and we're going to be watching to see what it be able to hold above this 479.54, the 382, and chop around and work itself back up. Because if it break through the 38.2, then there's a good chance that it could come down and test this range again. Remember that long breakout range that we've been looking at, that 178 to 389. So there's a possibility of that, get retested. So looking at the daily chart here on the price action, you see on Monday, after that big drop in the oil that basically pushed the market down along with the coronavirus spreading. And you can see that Tesla opened gap down and tried to come back up and test the 618 level, right? This 666.45, and got rejected and just came back down. Now, the other thing is on Friday. See, Friday, the market actually rallied back up toward the close, but Tesla still closed negative, and it still closed down on Friday along with closing down for the week. So that's a little bit of a negative for Tesla. So in the coming week, going to be watch again, to see would it be able to hold above this 382 at 479.54. See, could we get a bounce and maybe chop around in this retracement zone, and then eventually work itself back up and get above the 618 level at the 666.45. And as I have stated last week's video, basically looking at some of these low volume edge to identify some potential resistance and potential support level. You can see these potential support level actually become a resistance level now. You see, look at this 594, and on Monday it gapped down here and just try to come back up to this 659.80. That potential resistance level or support turn to resistance. So right now we're essentially looking at this, the 382 or the 479.54, because you can see there are a lot of other level here. If we take a look at here, you can see that there is this level down here, and some of these lower level, these lower edge. Right, you see these also could potentially become support on the way down toward this 389.61 if the price break the 479.54 and start making itself down, then we could see this retracement down to the 389.61. So we'll just keep an eye on it. Nobody know exactly what they're going to do, but we could only map out some of the possible scenario. and kind of keep an eye on it to see if our scenario is being played out, and we, do take whatever appropriate action that we have planned for that particular scenario. So if you like this video, make sure to click the thumbs up and help me smash the YouTube algorithm so other people could also get to see this video. And also click the subscribe so you won't miss any future video from me. Thank you for watching and good luck on your trading.